better pick, and we'll try to analyze and figure that out. But I think walking through this and giving you guys visuals for this, I think is going to be really good. So I'm going to try to work on those videos this week. You guys let me know what you think down below in the comments. Am I missing an investor profile? Is there something else you guys want? I really want to know what you guys want going forward on the channel. So if you guys could really take some time, I know on Sundays we usually took
There's a growing belief that Solana is going to surpass Ethereum and skyrocket in 2025.
And this is really why we believe Sol is going to flip ETH in market cap.
I mean, the Solana price on its own has been steadily climbing. The Ethereum value market cap has been bleeding into BTC and Sol. I mean, we see that in the Sol versus ETH valuation. Solana has been outperforming Ethereum this whole year.
And so if you believe that the metrics on the prior three charts are going to continue in the same direction, then it's pretty reasonable to conclude that the ratio of this chart is also going to continue in the same direction.
Managing partner at Multicoin Capital, Kyle Samani, backs this up with some pretty interesting data.
First, of course, blockchains are financial systems. I've been talking about trading for the last few minutes. And on-chain trading is, in our view, the most important metric for a blockchain.
So this is comparing DEX volume on Solana versus DEX volume on Ethereum. Solana is outperforming.
Over the last year, we've seen Solana DEXs basically come to rival Ethereum DEXs. Some weeks, I believe every data point here is weekly. So some weeks we're seeing Solana is higher than Ethereum, other weeks it's less than Ethereum. But it's today effectively on par with Ethereum in terms of daily trading volumes on chain.
Many people attribute the growth to Solana's 1, better UX, but 2, cheaper fees. And again, this channel will point out both sides of the issue. That's why you subscribe to Altcoin Daily. But I do believe a big reason that Solana is gaining on Ethereum is because so much of that network activity is being offloaded into the L2s. I mean, actually, that's clear. That is where the value is going. And maybe you would say, well, Austin, that all counts for Ethereum anyway. But because many of these have different tokens, the value is accruing on these L2 tokens. So that actually does support the thesis that if trend continues, Solana is going to accrue value at a faster pace and potentially flip as Ethereum value accrual is more fractured.
But Solana, I think, was so distributed during the bear market, like so many of the big entities had to sell it off.
And that's true. While Solana coin distribution, especially in the early days, was a bit more centralized.
Solana, I think, was so distributed during the bear market, like so many of the big entities had to sell it off.
The sell-offs during the last bear market really helped with that.
We've seen really strong support right around this 110 to 125 range.
Watch today's whole video for a special Solana trade I want to share with you.
Next, I want to look at actual direct value accrual to Sol, the asset, versus direct value accrual to ETH, the asset.
But just looking at another fundamental metric, Solana has caught up and at times started to surpass Ethereum in economic value generated from MEV, or maximal extractable value.
As of today, Solana, again, is effectively caught up to or is rivaling ETH on this metric. This is looking at the total validator tips paid to ETH stakers and Sol stakers in these respective systems. Some weeks Solana's higher, some weeks ETH's higher, but again, these metrics are more or less neck and neck right now.
And again, if that's too confusing, just understand it's a fundamental green flag for the network.
And then the third metric I want to look at is stablecoin transfers. Here, Solana is still well behind Ethereum, but I want to look at the relative ratios here. About a year ago, Solana was at roughly 1/10 or 1/20th of daily on-chain stablecoin transfers relative to Ethereum. Today, it's roughly half. So it's caught up by a ratio of roughly 5 to 10x, depending on exactly how you want to measure it. And again, we think this is key to show that, hey, money is moving around on-chain.
So this all suggests why Solana has been catching up to Ethereum. But will it flip it? What can we expect with Solana in the future? And there's really 3 big structural advantages that the mainstream media won't talk about. I will.
All right, now I want to talk a little bit about the future for Solana and why we think it has a couple of, really 3 unique advantages that we think are going to be basically impossible for the Ethereum community to recreate. The first is token extensions. Token extensions went live earlier this year on mainnet. Token extensions provide a lot of features that Wall Street companies want, or that payments companies want, or any major asset issue around the world. Those include features like interest-bearing tokens, so like if you want to have stable coins on chain, with it earn yield. If you want to be able to have confidential transfers so you can hide sender and receiver. If you want to do ability to issue and revoke assets, and a whole bunch of other features that in this kind of bucket of ideas. And all of these features were developed based on direct input from payments companies and Wall Streets over the last few years. And all of this is live on mainnet today. It's 100% free, 100% open. All the documentation is open and available.
So token extensions is number one. And this is actually the reason that PayPal chose to launch their stablecoin on Solana.
The first major token using token extensions is live now. It's called PYUSD. It's PayPal stablecoin. It went live a few months ago.
So this is why we're seeing some of this institutional adoption.
And regulated finance is only ever going to come on-chain at scale if they have all of these collection of features. And all of this stuff is just built into Solana L1 natively, and it's ready to go.
Solana Fire Dancer is obviously one of their most anticipated structural advantages still coming.
Fire Dancer is a new Solana client, expected to go live in the next few days or next few weeks. I think they're announcing the dates tomorrow at Breakpoint. For those of you who are unfamiliar, Fire Dancer is a new Solana client being built by Jump Trading.
Actually, it's live on testnet now. Still unclear when this will go live on mainnet. And essentially, this will just make things so much more scalable, so much faster.
This thing is going to scale, it's going to be fast, and it's going to allow everything that we like about Solana, the composability, the no bridging, all these things will just magically work even better under Fire Dancer.
And the third major structural advantage for Solana is the ability to scale with hardware.
One of the foundational design principles of Solana is the focus on scaling organically with parallel hardware. Anatoly's been talking about this since day one. I've been talking about this for years. And the idea is very simple. Is if you double or triple the number of cores in the system, you would hope that the performance would double or triple of the system. Very straightforward idea. This is obviously generically a good idea because of Moore's Law over the last 50 years. As core counts have grown, especially over the last 10 or 15 years, systems that can take advantage of that have gotten better in terms of performance. But this is actually particularly important today because of the renaissance happening in AI. There's now more capital going into the entire silicon value chain from design through manufacturing, and that's growing at the highest rate in both percent terms and absolute terms in the last 30 years. And this is all because of this AI renaissance. And all of these AI chips that are being built by all of these different startups, NVIDIA, AMD, everyone, all of these chips are massively, massively parallel chips. Not all of them will work for Solana, but it doesn't matter. You only need a couple of them to be applicable. And those are going to help drive the performance of Solana even further. What's so amazing about this AI renaissance is that it has absolutely nothing to do with crypto. No one in the Solana ecosystem has to know or care about any of the stuff going on in AI land. And you just have like an incremental 30, 40, 50 billion dollars of R&D happening across all these various companies. And all of that labor and energy is going to produce a better Solana network. And like those are the kinds of really foundational bets that you have to make at the core of the design of the system in order to win what is going to be one of the largest markets in the world, which we think is decentralized NASDAQ.
Now, my personal opinion on all this is, first off, just plain and simple. In bull markets, you want to bet on the altcoins, especially the lower cap altcoins outperforming. And in bear markets, you want to bet on Bitcoin or the higher caps outperforming. If you believe we're going into a raging bull market in 2025, as many experts do, then I do think it's a smart play to bet on the outperformance of the altcoins, especially lower cap. Also, I will say, looking at macro, the Fed just cut rates, the European Central Bank has been cutting rates, China is now stimulating their economy and cutting rates. 2025, from a macro investing standpoint, does look risk on. If you got value in today's video, hit the like button and click subscribe. We are so close to hitting 1.5 million subscribers who tune in for one video per day to learn about crypto. What's the one altcoin you love trading when you're not trading Bitcoin?
Solana.
Now, in my journey to learn about trading and just get better at it, I think many of you watched Simple Method to Make $100 a Day Trading Cryptocurrency, where we go over the risks. We go over simple strategies, the benefits, the negatives. Watch this beginner's guide if you haven't. But in this never-before-seen footage, this is a continuation. Sam, of the My Financial Friend YouTube channel, gives me an interesting strategy when trading Solana.
If Bitcoin goes up to 100,000, right, way up here, you would think that Solana would do really well, right? Like Bitcoin dominance is relatively high right now compared to what we've seen in the last few years. You would think Solana maybe does, I don't know, instead of doubling, maybe 3x's, right? Bitcoin dominance goes down, Solana 3x's. Let's say you're using Solana as a collateral.
By the way, follow along on exchange partner Margex and use code ALTCOIN and claim up to $10,000 in bonuses. Link down below.
And remind us why you like Margex. That's the platform we're using. Then we'll jump in.
Yeah, so there's no KYC, meaning you don't have to give out all your personal information. I think we all see data breaches almost every day, it seems like, with all your personal information. Maybe if you own 100 Bitcoin, 10 Bitcoin on an exchange, you don't want people to know who you are or your social security number or anything like that. So you don't need a KYC, you don't need a VPN. You can get set up in just a few minutes after checking the terms and conditions.
And obviously, not your keys, not your coins. So if you're not trading it, don't keep it on exchanges. Common safety with crypto. This was the trading tip, though, the edge.
One of the really cool things that they have is you can use different forms of collateral for trading, which is one of the strategies that we'll be talking about today, which I don't know any other exchange that does this.
So that basically means for individuals that want to trade the stability of the Bitcoin price, but want to offer up maybe an altcoin they made bank with as collateral instead of cash.
Let's say you want to trade Bitcoin because it's got the most liquidity. It's got some volatility compared to normal assets, but it's not moving around, quite as much as a smaller crypto or a meme coin or something like that. You're trading the Bitcoin chart here, and you can use all different forms of collateral, from Bitcoin to Solana, USDT, Caspa, XRP, ETH, and that is actually the first strategy that we'll talk about. It's using different forms of collateral. A lot of people naturally use USDT for trading, or maybe they'll trade Bitcoin with Bitcoin, right?
So if that's unclear, here's an example of how that may provide traders with an edge.
Right, let's say Bitcoin goes from 50,000 to 100,000. It doubles, right? And you're on 10x leverage. Great, you get a huge return, a 10x, right? You would have, instead of $100, you'd have $1,000 or $1,100 because you made $1,000. If Bitcoin goes up to 100,000, right, way up.
Availed ourselves of every diplomatic opportunity to make.
This is the world. For all you flat earthers, this is from space. This is what Earth looks like from space. It's not flat, it's a circle. Yeah. Holy fuck. Man, I wonder how fast they were going. Oh, I think it's a time lapse though. Time lapse. Looks like CGI. What is this? threat? Is that like the signals? This is incredible.
Peas and peas, and we admit now.
Dude, that was so cool. Let's watch it again. It's beautiful. It's majestic. I mean, it legit looks like a simulation. Man. Honestly, like, I would probably take a Mars mission later in the future. I would want to be part of that. You know, work alongside the robots, build stuff, help out, build a colony. I'd want to do that. I would. We get to Mars, man. Moon Base 1. Like, I'll work on Moon Base 1, work my way up to Mars. Like, bro. I would, man. I've been playing my video games my whole life for this moment. Travel the stars myself.
Ukraine. I mean, I've been warning. And then meanwhile, in terms of the war in Ukraine, I mean, I've been warning about this for 2.5 years, how dangerous the situation was. And that's why we should have availed ourselves of every diplomatic opportunity to make peace. And we now know, because there's been such universal reporting, that in Istanbul, in the first month of the Ukraine war, there was an opportunity to make a deal with Russia where Ukraine would get all of its territory back. It's just that Ukraine would have to agree not to be part of NATO, would have to agree to be neutral and not part of the Western military bloc that was so threatening to Russia. The Biden administration refused to make that deal. They sent in Boris Johnson to scuttle it. They threw cold water on it. They blocked it. They told Zelensky, we'll give you all the weapons you need to fight Russia. Zelensky believed in that. It has not worked out that way. Ukraine is getting destroyed. It's very hard to get honest reporting on this from the mainstream media, but the sources I've read suggest that the Ukrainians are losing about 30,000 troops per month. And that's just KIA. I don't even think that's wounded. That on a bad day,
Hey guys, welcome
they're
back.
suffering 1,200 casualties. It's more than even during that failed counteroffensive last summer that Ukraine had. During that time, they were losing about 20,000 troops a month. So the level of carnage is escalating. Russia has more of everything. More weapons, more firepower, air superiority, and they are destroying Ukraine. And it's very clear, I think, that Ukraine, it could be in the next month, it could be in the next 2 months, it could be in the next 6 months, I think they're eventually going to collapse. They're getting close to being combat incapable. And in a way, that poses the biggest danger, because the closer Ukraine gets to collapse, the more the West is going to be tempted to intervene directly in order to save them. And that is what Zelensky was here in the U.S. doing over the past week, is arguing for direct involvement by America in the Ukraine war to save him. How did he propose this? He said, we want to be directly admitted to NATO immediately. That was his request. And he called this the victory plan. So in other words, his plan for victory is to get America involved in the war and fighting it for him. But that is the only chance Ukraine has. And it is possible that the Biden-Harris administration will agree to do that, or at least agree to some significant escalation. So far, I think Biden, to his credit, has resisted another Zelensky demand, which is the ability to use America's long-range missiles and British long-range missiles, the Storm Shadows, against Russian cities. That is what Zelensky is asking for. Zelensky wants a major escalation of the war, because that is the only thing that's going to save him, save his side, and maybe even his neck personally. And so we're one mistake away from the very dangerous situation that Chamath and Freeberg have described. If a President Biden, who is basically senile, or a President Harris agree to one of these Zelensky requests, we could very easily find ourselves in a direct war with the Russians.
The waltz into World War III is what it should be called.
And the reason why this could happen is because we don't have a fair media that's fairly reported anything about this war. I mean, Trump is on the campaign trail making, I think, very valid points about this war. that the Ukrainian cause is doomed and that we should be seeking a peace deal and a settlement before this can spiral into World War III. That is fundamentally correct. But the media portrays that as being pro-Russian and pro-Putin. And if you say that you want peace, you are basically on the take from Putin and Russia. That is what the media has told the American public for 3 years.
The definition of liberalism has always been being completely against war of any kind and being completely in favor of free speech of all kinds. That's what being a liberal means. We've lost the script, and I think that people need to understand that this is the one issue where if we get it wrong, literally nothing else matters. And we are sleepwalking and tiptoeing into a potential massive world war.
Jeffrey Sachs said it perfectly. You don't get a second chance in the nuclear age.
You don't.
All it takes is one big mistake.
You do not get a second chance. And for me, I have become a single issue voter. This is the only issue to me that matters. We can sort everything else out. We can figure it all out. We can find common ground and reason. Should taxes go up? Should taxes go down? Let's figure it out. Should regulations go up? Should regulations go down? We can figure it out. But we are fighting a potential nuclear threat on 3 fronts. How have we allowed this to happen? Russia, Iran, China. You cannot
What's up, pup? What are you doing here? Come here.
underestimate that
Come here,
when
pup.
you add these kinds of risks on
Come
top
here.
of each other, something
Come
can
here.
happen.
What are you doing? Here, you want up here? Here,
And
you want a
I
treat?
don't think
Come here.
people really know. They're too
Yeah.
far
What
away
are you
from
doing?
it. They're
What?
too many generations
What?
removed
Are
from
you
it.
feeling lonely?
War is something you've heard, maybe your grandparents talk about.
Come here.
And you just thought,
What
okay,
are you doing? You're over here in the corner, like looking at me,
I lived it.
needing attention.
It's
You want
not
a treaty? You want a treat?
Jamal, you're right. I
Want a
mean,
treat?
during the Cuban Missile Crisis, all of
Bro, you
America
want a
was
treat?
huddled around their TV sets,
Treat.
worried about
Do you
what
want
would
a treat
happen.
on stream?
There is no similar
Treat
concern
on
in this
stream?
day and age about the
Up here.
escalatory wars that are
Come here.
happening.
Up.
There's a little bit of concern, I think, about what's happening in the
Look at
Middle
that.
East. There's
You want a
virtually
treat?
no concern
Okay.
about what's happening in Ukraine because people think it can't
Were you a
affect
good
them.
puppy today?
But it can.
Always a good puppy.
And one of the reasons it could affect them is because we do not have a fair debate about that issue in the U.S. media. The media has simply caricatured
and I would
any
say,
opposition to the war as being pro-Putin.
so I would say that when every pundit and every person in a position to do something about it says
Come here.
you have nothing to worry about,
Go right.
you probably have something to worry about.
She wants this bone.
And
Come
so
here.
when everybody is
Baby, get
trying
up.
to tell you,
Up.
everybody,
Up.
that this is not
You
a
want
risk,
this?
it's probably
Get
a
up
bigger
here.
risk
Yeah,
than we think.
Up here. Up. Up. Good.
Yeah, they're protesting too much. How can you say it's not a risk?
Methink thou doth protesteth to
Right.
All right.
Okay. That was some good stuff, actually.
Back to the channel, and if you're new to the channel, thanks for stopping by. Today's video is a massive one. It is our monthly series. We're updating the Q3 into Q4, and of course the data for October coming up for the stock markets, Bitcoin, cryptocurrencies, and real estate. So don't go anywhere, hit that like button, subscribe to the channel if you haven't already. It's your home of macro cycle analysis. As I said, today's video we are covering the works on the financial markets, in particular Bitcoin and the stock markets. So we've got a lot to get through in today's video. If you've seen one of these videos that I do, there is a lot of data that we cover. So if you need to watch it multiple times to take in all the information, be sure to bookmark it or save it somewhere so you can watch it throughout the course of October and quarter 4 in 2024, because I think this is now where big things begin. It's not going to be an easy ride. The bull markets are never the easy ride. The easy ride is the bear market. At least that's from my experience and what you guys have been saying in the comment section, especially following along this journey over the last several years. We've got heaps to cover, along with something in the title around, the parabolic move begins here. Bitcoin, S&P, real estate, October, lots to get through. Current thesis, has anything changed that I've been looking at in terms of the macro outlook here over the last several years that I've been posting on the channel? The real estate cycle, of course, OND, October, November, December, Q4. I think we're going to see some significant volatility, but I want to show you exactly where in today's video. Economic data, expectations. Obviously, we've seen interest rates get cut, and then also money supply increase in the world's 2 largest economies, the US and China, and that's had some pretty massive impacts in the stock markets, and I think that's going to carry through into Bitcoin. More on that. Global indices. As we've covered before with this stage, it is the winner's curse phase. Some of these terms might be new to you, but don't worry, I will go through those in today's video, along with updating it in future videos, which is why I suggest hitting the subscribe button and the notifications so you stay updated and don't miss the analysis day to day. Market sentiment and trends, Bitcoin. We've had the March signal. At that time, I suggested roughly 4 to 6 months underneath the old all-time high. We are now into the 7th month, and I think this is probably that time where we do see pretty big things happen. Not in a straight line, but that signal helped us out over the last 6 months, and I think we're getting ready for this next particular move, and I'll show you that time frame as well. Altcoin market cap, big things there as well. Of course, October action plan, including invalidation levels. So let's kick it off with the theory. My theory is the 18-year cycle, roughly 14 years up, 4 down, as you can see at the bottom here. We're in this stage here, winner's curse phase. You've probably heard this all before, but this is where everything goes up. And I want to show you that now. Everything is going up, no matter what reason it is. This has been put together by Akil and Phil at Property Share Market Economics years ago. I saw them post about this in 2012, and Phil talked about this years before that. This was the forecast all those years ago. Not like these idiots, and I say idiots really strongly, that call for a depression every single flipping year on the way up. Not going to happen. He's basically been calling market going straight up, and we can see that now. We're in this final stage of the market, which is why you should really be paying attention to your portfolio.
You know, bring me your bone. Oh, damn.
Yourself for this final leg before the next thing. So the winner's curse, everything is up. Take a quick look. The NASDAQ, we've got a day left. This is for all the markets now. A day left until September closes, and we move forward into October. It's at potentially a new all-time high monthly close. The Dow Jones, new all-time high monthly close. The Home Builders ETF, new all-time high monthly close. Australia, new all-time high monthly close. Remember, there is still several hours left on some of these markets, and that's barring any sort of significant drop of, 1.5%. These are for stock markets, of course. It's unlikely in the case of a lot of these. Canada, these are just other big economies around the world. Everything go up. It's just straightforward. Winner's curse, everything go up, even if it doesn't feel like it in our day-to-day lives, and the data is bad for the economy that should be showing that you just wait. This market is going to collapse. Maybe it does. The main point is you are trading money. You put your money into the market or whatever other markets you do, you want that to go up if you're long only. This is the time. It's saying up, and we've been saying this for months, probably even years, as I've looked at before. Canada, new all-time high. The top 50 in Europe, getting close to a 24-year high. Remember, they have had a bigger issue in Europe than other countries around the world, and that's obviously led with the main ones here with the UK, nearly at a new monthly high. The reason I'm showing this is because when markets break out into new all-time highs, they typically continue up for longer than most of us can expect. And this is basically the time for that to happen in the winner's curse phase. A lot of people look at this as all-time highs, time to short. That's entirely incorrect. You do not try and short these big bull markets that are running away. Germany, unless you want to lose a ton of money. Germany, new all-time high. And that's basically been the message here from Germany for many, many, many years. That's the stock market. Economy, as I said, different story, but basically stock markets are saying higher and higher. France, getting close to a high again. Let's get down to some of the big countries here. India, this is at new all-time highs as well. This is just like a runaway bull market. Japan, it's hit a 34-year high, taking out that top, and it looks like it wants to come back and test this level again, and it's come back, tested those lows, and it's now bounced for September and October. China, big news over the last few days. It has also risen dramatically with the word that they're printing more money over there, yuan, and that has pumped the stock markets. Likely going to take out this top here as we close in the next 21 hours. So that would be a strong sign that this low is in, and you've got a bit of a inverse head and shoulders here with the neckline getting broken on very big news. Let's keep going around the world. The US dollar, as we expect to continue down through this stage of the cycle, winner's curse phase. And the rest of the currencies that are in the basket for the US dollar are looking strong. Aussie, Euro, Great British Pound, the Yen, Swiss franc, those are looking strong, which means the US dollar is going to be looking weak for this stage of the cycle. Massive warning on that. As we get towards this peak, and mark my words, copy this, use what you can, go and post it somewhere, we will hear that the US dollar is trash. You'll hear cash is trash, don't hold cash, and that'll come towards the peaks. It happened in 2021, it's happened at every single other peak. If you choose to believe that, then you're probably going to continue to hold assets while those assets crash, and the US dollar gets stronger. It's basically the safe haven in those crashes, right? If those assets are getting cheaper against US dollars, you're better off holding the dollars to try and buy back those assets. I can almost guarantee that that will happen. Take it or leave it. It's entirely up to you. Gold, new all-time highs, and it is up about 30% since Bitcoin topped in March. And I think that's about to change as well. You can see there's the March move where gold broke out, and it is now at nearly $2,700. It's a 31% rise from the open in March. So around the globe, we're seeing asset prices going up at new fresh highs, like silver, potentially breaking past its 50% level. Huge move happening now. It doesn't feel like it right now, this whole parabolic move, but when you look back on it, August was the low, September is potentially breaking this major 50% and these tops, and when you look back in several months, it's probably going to be higher, with a few kinks in the way, of course, and then you'll see that that was the low formed. You never know that the low is at the time, just like September 2022, there was a low and the market's moved from that point. Copper, major asset in the, or major commodity used in the economy, getting close to closing at some new, fresh, all-time highs, on the monthly chart that is, so we're looking longer term here. Again, pretty strong on all of these charts. So, that basically covers the global indices, bull markets, and the commodities there. I've talked a lot about the economic data here, and to try and prevent another 41-minute video with our monthly updates, I'm going to cover these off quite quickly. So keep up with us. Number 2, real estate cycle done. My thesis, has anything changed? Absolutely not. it is still up, but as you'll see with this next lot of data, the volatility is probably a little bit shaky leading into the election. So basically short term as we look out for this longer term cycle, short term meaning month of October. So what else happens just after October? I think it's important to have a look at that now. You've got the November Fed discussion here about the interest rates, and the money is on another 0.5% drop. I think this is going to be quite bad for markets, or at least people who aren't in the markets, because it's going to continue to send things skyrocketing. If in fact this happens, whether it's a quarter or a half, things will keep going up, and eventually this won't happen because they'll have to start to put the rates up. Not in the next meeting of December or these ones here. Maybe they wait it out a little bit and they'll start to put them up too late, which is in the later part of this winter's curse phase, probably sometime 2025, right? Which then leads to things starting to roll over post 2026. So that's what I'm thinking with these interest rates now over the next sort of 6 to 12 months. Fear and greed, we're definitely creeping back into the greed as the markets are at new all-time highs. And I've also said in terms of real estate, those prices are higher. And in terms of the Redfin home price index, prices are up. Even though you see these sort of charts come down, that just means that the prices aren't going up as fast as they were year over year, but you're still getting increases on real estate prices in your major capitals. So basically prices are up. It's up in Australia, UK, US, which is basically what this cycle is based on. So moving forward from that, let's get into the nitty-gritty stuff. So we'll come down here into market trends, but mostly into Bitcoin and the stock markets, in particular the VIX. I'm going to start with October in a short-term outlook and then go to the longer-term stuff. October market performance, recent 21 years, and the election years. So looking at the dotted lines here, these are election years, and these solid lines are every other year. This is just for October. And so in terms of the volatility, as I've suggested here, October, November, December, probably some volatility, bam, bam, down and up, but it's going to be a little bit more jagged. You can see leading into the 7th or 8th trading day of the month. That's your 9th and 10th. Remember, this is trading days, not including the weekends, because it's looking at the US stock markets. Bit of a trend down for 2.5%. This is just the historic outlook. It does
Let's try to do some scalping tonight. Do some scalping.
doesn't mean it has to happen, but it's just a historic outlook. Maybe it comes in a little earlier and then pumps. Maybe it comes in a little later and then pumps. The point is that we've seen over the last 21 years here, and then the election years going back 7 years, a bit of a kind of a rocky road through October. So from that point there, roughly around the 7th or 8th trading day, a bit of a rise for the next 7 days, a bit of a fall for the next 5-ish days, and then a climb out of that towards the end of the month, leading to the 23rd, 24th trading day of the month. Now, if the chart happens to follow something more like the recent 21 years, you're going to get this solid line type of movement where opening at 0, a little bit of a climb, fall back, a little bit of a climb, fall back. Overall, the markets have been relatively strong. September has been a pretty strong month overall, even when the majority have expected it to be a weaker month, all the Rectember and all that crap. Nonetheless, there's probably a couple more surprises in store for the markets leading into the election before things become more clear and the markets get a little bit stronger and more decisive again. And one more to look at before we hit the VIX, S&P, and Bitcoin. The importance about this stuff is that it gives us a bit of a roadmap to what might happen for BTC and cryptos as well. You want to see a little bit more excitement into the markets and more clarity and certainty as we lead into the end of this Q4. S&P 500 average path in all years since 1950 when return through Q3 is greater than or equal to 20%. And so this is assuming that today's data for the S&P 500 remains with a 20% year-to-date gain, okay? And so it's not the same as this data here. This one here is looking only at years that had a 20% move from the beginning of the year until the end of September. So basically the first 3 quarters, 20% gain. October, a little bit of a rise, again, falling into roughly mid-month, again, bit of a bounce, and falling towards the end of the month. Before that, those final few days of the month take off. And you can see here, similar sort of thing, and then it takes off with a little bit of another bump there, a bump, and then a take off at the end of the month. So you're seeing that for October. Now, November is where it gets interesting, gets back to that 0 point, and December, it's all gain from there, right? So this might happen a little bit quicker with the election as well. This one doesn't take into account that it's only election years. It's all the years that have 20% for the first 3 quarters of the year, but nonetheless, they are all basically up. What else can we expect? The VIX. The VIX is the volatility for the stock market. And if we see volatility, the VIX spiking, typically means you're going to see some sort of lows for the S&P. It doesn't need to be a massive low, but you're going to see some sort of fear and significant low, I guess, for that short period. The VIX index, October of election year, so the month before the election, goes back to 1988, nearly 40 years, roughly 36 years of data there. The VIX start, VIX end, okay? All of them basically up, which means the S&P 500 would have some corrections within that month, right? That's the deal there. There's your average, medians, and maximums. The VIX, I've gone through this and labeled it up for your convenience. Here we are with the data. Let's start with the Octobers and what we have seen through each of the years going back to almost 1989. It's basically 1990. The green ticks are the Octobers that have seen some significant volatility that has taken out the volatility of the previous month. That's all I've got here. So as an example, let's just zoom into something here. You can see September is higher, October went higher than it. So essentially, it's got to be more volatile than the previous month, of course, being September. But we saw them this year. We're seeing the most volatility from August. So it could be a pretty easy month to break. The top there's around 24. So essentially, we'd see the volatility spike up. If you see that, this is how to use it, as I talked about here. Action plan, including the validations. You see the spike up. That could be a good low for the S&P 500 at or around the low. Okay, but at the time, most were probably telling us that it's going to go lower. Remember the yen carry trade fear of August? It was as if the market had to collapse from that point. It was over, but it wasn't. It was the bottom, the absolute bottom, and it's happened with each of these spikes. 21 out of the 33 years, we've seen October spike more than September, basically just the volatility picking up more than September. So about 63% of the time. It's not enough, but you can see that, well, 6 out of 10 times, October's going to be more than September. That could mean that that's the end of the move, or we could have a little bit more. Essentially, the main thing I'm looking for here is volatility in October, possibly good times to be buying up, because my thesis, might not be yours, but my thesis is we are still going up even more over the course of the rest of 2024 and into 2025. So there could be good buying opportunities, more could present themselves, but at least we have something to work with. Now, if we work with the election years only, so 2020, 16, 12, 8, so on and so forth, I've done the numbers here. 6 out of 8 of those years have been good volatile times, so about 75% of the time have been reasonably good. So we can take it back to 2020. Here it is. There was a spike, and then the market went higher than that point, so a good buy the dip opportunity. That's the example that I'm using there, and that's how I would look to use it. So over to the S&P. That's the longer term outlook. Let's start with the shorter term and move on from there. S&P has been climbing into new all-time highs on lowered volume. As I've looked at before on the channel with low volume increases, uptrends here, typically the market has come back to fill that gap of the low volume with more volume to the downside, just basically trying to find where the next support level is for the market before it can move higher. It's happened each of these times here, and I've gone back and had a look at some of these rough time frames. You can see on the average, which is the blue line, here are some low volume days and going across to about there. So that period is roughly the low volume period before the market peaked, rolled over to backfill that price area. So there's the price area. The market came back to that. If you know this sort of stuff in advance and you have a rough time frame, well, you're basically forecasting what the market is likely to do. No guarantees, but likely to do. So it's rising here on low volume, comes up and falls back into that. It went further. The yen trade happened, but then it basically bounced from that point. Again, it rose on low volume from here until about there. So all of this price data, before this happened, you don't know that this is going to happen on this side, right? There is a high chance that the price is going to come back and fill in that gap there. Just looking at recent history, the last several months, it's happened time and time again. So if that is potentially going to happen? Well, eventually we'll probably fill some of this price range here, maybe all the way back to about 5,700. We're only at 58 now, but it could go a little bit higher first before coming back over the top of that price data. The time frames I've looked at for this to occur is roughly 4 to 5 weeks from the point of the low volume starting. So the low volume starts from here, roughly under that average, until it fills in again. There it is there. There's 28 days. There's your 4 weeks. And you go back to these periods here, low volume beginning roughly here, up until this point. Again, there's your 20 days up for it to backfill. There it is there. 34, which is basically your 5 weeks. Now you can go back and do this over all of the data if you wish. That's what I would do, so that you feel comfortable with how you're going to place your trades in, over the coming days and weeks. So there it is there. I think that's a possibility over the course of October, especially leading into the election. So overall, that's the short-term outlook for S&P. Longer term, I think we still see higher prices here. Take it out to the quarterly. It's basically been straight up from this point here. 1, 2, 3. This is likely going to end green as well. So we're going to get a green quarter for quarter 3, 2024. 1, 2, 3, 4, 5, 6, 7. It's done 7 in the past. Many, many green quarters can happen in a row, even with volatile shakeouts. Look at that one there. For October 2014, 10 years ago, October went lower and then bounced to close higher. So some pretty big moves can happen within that month of October before the quarter 4 ends higher. Just as one quick example that I pulled from there. So keep a lookout for that. Not saying that it has to break down from 51, but you might see some sort of quick flushes, obviously leading into the election, and then running out to the end of quarter 4. Crypto, fear and greed index, it is climbing again. We are in greed. Hopefully we see some quick flush outs along the way. But this, I think, is a really solid base that Bitcoin and cryptos can build from into this quarter 4 of the cycle, right? So there it is. There's the base. Each of these times you see this happen. So from these moves, from these big flush outs with
What's up, guys? How we doing?
Weak or very high extreme fear, it's
What
a
up?
good base.
Bosco, what's up, dude? Hey, I'm glad you're in
Each
here,
of the
buddy.
times previously,
How's your night
and
going?
especially at this stage of the cycle.
Check this out. This is
you
my
can
new
definitely
wallet.
start to see things pick up from here, not in a straight line. And
I'm in a trade right now. I made
I
$17.
would like to see, and it probably will happen, some good flush outs. Watch the price, and the price will probably be higher than the current lows we've seen in the market. The two most important ones right now, 49k in August and 52k in September. They're the two significant lows. Speaking of lows, the interest in search volume on Bitcoin is at its record low levels. These were the levels seen before Bitcoin pumped in 2023, before it pumped in 2020, again around the same month, October, and we saw it again, October in 23, October in 2020, and if we had some more data back here, going back years, we'll probably see a little bit more there, but nonetheless, this is typically what we see before the big moves begin. Now, it could be a big move like we saw
only up
for
$2
6 months in late 23, 24, or we could start to see it go even more so, like what happened in the bull market of end of 2020 into 2021, where you really start to see that search volume pump up. I suspect it's going to be the latter, this one here, because of what I've shared with you with the real estate cycle, that we're coming into the end of this. Everyone feels like, well, I don't want to say everyone feels like they're rich, but the haves have got more, the have-nots probably got less. There's more money in the system. That is a fact, not my opinion. We obviously know that the US is printing, China is printing, two largest economies throwing more money into the system. Therefore, eventually, I think it's going to find its way into riskier assets as more people start to talk about all the profits they're making in their stock market portfolios, in their real estate portfolios, and we're also seeing those prices go up. And then they start to get more degenerate and throw money into Bitcoin and cryptos, artwork, collectibles, all sorts of shit that goes up and comes straight back down. So we're beginning to see a little bit of that climb into the exchange volume. So obviously, Coinbases and all the other crypto exchanges out there, slightly higher lows and higher highs are beginning to break here for September. Maybe it continues into October. We saw a similar-ish thing in October before the market broke out. So again, you want to see more money coming into the system, and this is a good way to track that, to see if there is more money actually coming in. Speaking of money coming in, you probably hear the next headlines come up about the FTX $16 billion fund that's getting released to the victims of the FTX collapse of 2022. More money's potentially coming back. They might not put it into the system. They might be degenerate enough to put it back into the system. We shall see. On to the monthly data. So this one here was for the S&P 500 using our TIA indicator suite. Brand new products here. Check it out. Link in the top of the video description if you want to get a 7-day free trial to use this for your own trading and investing. Nonetheless, I'm just having a look at the monthly returns. I'm going to just check Bitcoin here because the video is going long enough. I've got 2010 unchecked and 2024 because the years aren't finished. October is typically known as one of the best months of the year, along with February and April. So typically you'd see reasonably good returns here for BTC. Quarterly, also looking pretty good. 61%. It's the second best quarter of the year. So that doesn't mean that October could be good. It just means that the quarter is likely to end in the green as well. Speaking of quarters, this one is a very interesting one for the cycle, because if we don't see a red this quarter, which is very close, it could see a red. It's only 5% up from the beginning of the quarter. We have 1 day left. If Bitcoin was to drop back to 62,700, so underneath the open, we would get a red quarter. Well, then that would be equal with each of the previous cycles. So each of the previous cycles, we've seen at least 3 red quarters. So I've got my little warning here. Warning for the parabolic bull run. Quarterly returns. There's never only 2 red quarters. So this is the interesting part that I'm leaving right to the end for you guys who watch the videos through to the end. I've got a lot more to get on with Bitcoin, right? But this piece here could save your ass when we start to see the parabolic bull run take off and all of the excitement comes back into the market. Look at the previous cycles here. So I'm just going to highlight them. 2021, you've got 1, 2, 3 reds and then a 4th red there as well. So there were 4 reds in that previous cycle. Now you've got the 2015 to 2017 bull run. 1, 2, 3 reds. The reason why this is a massive nugget of gold is that if you were to see a pretty big correction, it might be one of the last times before you see the end of the bull run, right? Because most people are probably going to be getting absolutely shit scared because the volatility is increasing. But just looking at the data here, if this is going to end green and we only have 2 red quarters so far for this Bitcoin bull run, there might be one more coming, and that could really throw a lot of people off.
What's up, guys?
Right? The quarters themselves, you can see there was 3 quarters here in 2015 to 2017. They were negative. There's a big swing. So within the quarter itself, look top to bottom, still a 32% swing there, but where it closed was only 9% from the open. So pretty big buying opportunity there, basically a big buyback. This one here was only 3.5% from the open, so the close was just under that. The swing itself was still 24%, so pretty significant move. We saw that multiple times so far for BTC. And the last one here, pretty
Buyers
significant,
trying to get in.
and it was down by 9.8%. So multiple 9% there, and then a 3.5%. The other one here, that was 1%, massive swing. I don't think that's going to happen again. You know, it's going from like $50 to $300, and you got 2 other quarters. Each of these quarters had closed pretty close to their open, which means they got bought back, but you had to have your patience and your wits about you to buy up those lows and then get back to that close. Here, 22%, 13, and then 10. So that was the bigger one here. That was the tough one. And then you had a 40% correction on the quarter in 2021. So lots to think about as we work our way into the last half of the bull market. Here we are with the monthly look at Bitcoin.
Another
So
Sunday walk video.
this one it takes its time to...
I think it's been a couple of weeks since I've done one of these. Last one was in
Hey, what's up, guys? What's happening? How we doing? Yo, you guys got mics? Somebody's got a mic in here. My mic's booming. That's epic. Dude, that was so close! I'm up, I'm up, I'm up, I'm up, I'm up. I'm down, I'm down. This is good. Oh, my bad. I stole your boost, homie. I seen it! No. Oh, that's too good. Flip it. The worst pass ever. I'm so bad. Damn, bro. Good shot. I don't know what the fuck that was, but I will take it. Tough. These guys are tough to play with. can't do much with that, bro. Just saying. Good thing you got back in time.
Yeah, I know. Well, they finished it at. They were going to finish it at 11, so they left at 9. They right at room, so I figured.
Yeah.
I got to tres leches
Ooh.
made by my friend that I told.
Yeah. Yo, what's up, guys? What's happening? Welcome, welcome. I just want to get to champ 3 on 3s. Is that so hard to ask? Is that too much to ask? What's up, guys? What's happening? You guys are stopping in. Appreciate you guys. That was a good shot. Good read. Guys, I'm probably gonna end the stream, honestly. 40 bucks up in my trade. Here, let me put on my trade down. $40 up in my trade right now. So I made 40. Should I pull it? I feel like I should pull it.